Okay, welcome to today's market debrief. What you are seeing here on the screen is the S&P 500 index. Last night, we see in the S&P 500 index there's a lot of selling, okay, but towards the closing, it basically managed to recover. All right, so in total, right, the S&P 500 has pulled back to about like 3.8%, and what it does is basically is testing this 50-day moving average. Okay, so in the short term, right, there might be some rebound or some updates following the next few days. Okay, but it's still too early to say that the so-called pullback is over. Okay, so we like to observe the next 1 to 2 days. Now for the Nasdaq, all right, the story is a little bit different. Okay, Nasdaq has pulled back to about like 8.3%. Okay, and so this goes to show that the Nasdaq, the tech stocks in particular, are the one that are facing quite a lot of selling, mainly because there are a lot of so-called overpriced stocks. For example, like Tesla. I know Tesla is like trading kind of like 1600 P ratio, or 1005, and people are still asking me, can Tesla still can buy or not? No, over here at 800 plus. Okay, so Tesla is the one that has dropped let's see, 30%, from its high. Okay, so if we look at their PE ratio, okay, it's like 1104. Okay, so it's still very high. So I remember, like, in when it was at 800 plus, right, it was trading about like 1600 PE. Okay, so that's the reason why Nasdaq has a bigger drop as compared to the S&P 500 index. Okay, for the German DAX today right now is positive. Okay, and it's moving outwards. Okay, last night it has a sell down together with the US market, but managed to recover before their closing. Okay, so I think overall we should be expecting a small rebound, tonight, and maybe probably tomorrow. Now for the Hang Seng Index, there's a big sell off today. Okay, mainly because of news in. Okay, there's a news in Hong Kong. The government intends to up their so-called stamp duties from 0.1% to 0.13% on the value of transaction. Okay, but this one is only going to start on the 1st of August. Alright, so can you imagine? I mean, now it's only just like coming to March, end of February, and 1st of August, people are already selling off. So I would guess that this news basically make the sell-off even worse. Okay, it's probably supposed to be like halfway kind of selling. Okay, but this particular news has created a so-called more selling in a strong sector, which is the banks. Okay, so which probably I'll show you guys now. Okay, so if you see overall, right, like Singapore Banks DBS is it has a rally today, mainly due to OCBC news. Okay, the three banks, Singapore banks, are quite good. Okay, still staying strong. If you look at the Australian banks, okay, overall still okay, not a big sell-off. All right, ANZ still hugging towards the high. Westpac still strong. Okay, so the Australian banks are strong. If you look at the American banks, basically there's a rally already, happening. We have Morgan Stanley, trying to make new highs. Bank of America making new high. Okay, so, but if you compare to the Hong Kong banks, Hong Kong banks tried to rally and came down. So I believe, right, this selling happened is, I mean, the insider, they already knew that the government is going to come out with the measures. Okay, and then they sell off. Right, look at ICBC, same thing happening. Okay, so mainly the Hong Kong bank sell-off, right, is due to this news, because overall the global bank sector should be quite resilient, quite strong, or as in recovering. So that is probably that is the main reason why the Hong Kong sell-off um, is a little bit too much for today. Okay, so probably we expecting a little bit more, or probably stay stagnant depending on the tonight's outcome, in the US market. So for the China market similarly, it has a sell-off together with the Hong Kong market and Japan. So mainly the whole global market last night, today, basically we are all in a sell-off mode, and Hang Seng, because of news, went into a so-called further selling. Okay, so let's take a look at the Federal Reserve balance sheet. Okay, so what we have from last week is here, and then on the 16th February, which is last Tuesday, they had up the ante in printing more money by buying bonds from the open market. Okay, so the amount of debt that they are getting right under their balance sheet is I would say is exploding lah. Is going to keep on going higher. Now for the gold recently, after this trending down, right, it hit the support area. First time it had a bounce off, which is a little bit weak. Okay, and then it comes down, and then now it has started to bounce back up above the support region. Okay, so I don't know, most likely it might start to uh, move up higher, probably testing the 200-day moving average and this intermediate resistance here. Okay, which is about 1875 area. So for stocks, what should we be looking at? Okay, this is the Straits Time Index. Okay, so I've mentioned that there's this support region around 2850 to 2880 area. Okay, so what we have is it basically stays inside here 3 days, and today the SDI start to burst back up. Okay, above the support region. Okay, so this is good news. Okay, so this is mainly moved by the some of the big cap stocks, the three banks. Okay, so this is OCBC. Okay, mainly because of today's news, and what we have with today's news, right, is that overall I would say the fourth quarter, right, compared to the fourth quarter 19, it's down a little, but I would say that I mean, based on, we have to consider that we are having our COVID situation. Okay, so the main thing is full year, right? The first two quarters has been quite bad. Okay, and that subsequently third quarter, fourth quarter had recovered. So I would say coming this year, most likely we should be recovering or maintaining in this region. Okay, so if that's the case, right, I mean, it bodes well. Okay, considering that our economy is still closed, in terms of tourist numbers and stuff, is not there yet. So if one day, I mean, we started our air travel bubble with Hong Kong, and now I think there's news that Taiwan is reopening. Okay, so that will probably bode well for the economy, and the economy will be slowly opening up. Alright, so overall I would say OCBC, there's still room for OCBC to move. The main resistance area is probably roughly around here, about $11.20. Okay, where you have failed multiple times, over here. Alright, and in here in January, and then here before the COVID lockdown and the sell down. Alright, so there should be some room to go, and it could be spurred on by UOB. Okay, so UOB will be announcing results tomorrow morning before market opens. Okay, so I mean, if the results are good, it will probably give another bar. You push OCBC and DBS Bank up another day. Alright, so do watch out for the news tomorrow. Whereas DBS, though, I would say, I mean, at this moment OCBC is the strongest one. It has broke off from its resistance. DBS seems to be lagging in this case. Firstly, because they already announced their results. All right, over here, so there's a rally pullback, and mainly this is a major resistance area. Okay, so it might have a tough time bashing through this whole area. Right, Hong Kong land had a rally today, okay, and then testing this high, the previous high made here on the 15th January. Okay, so do watch out for this. I mean, look for. I mean, now with market going into like a pullback or correction period, there might be some pullbacks or sideways tradings over here to form like this cup and a handle. If it does that, do monitor closely, for a breakout on the upside. Okay, so there is some room for it to go before its next major resistance area. So these are some of the big cap stocks that has been pushing STI stocks also together. This is Jardine Matheson Holding. All right. So after 3 weeks of sell down, it finally had 2 up days, big rally, and its sister company Jardine Strategic Holding. Okay. The sell down, test this support region, and then it rebounded strongly back up. Okay. So overall, I would say Singapore. I mean, despite being the one of the weaker economy or stock market performance in the world, during this period is still maintaining well, or is playing catch up. Okay, and as I've mentioned in the last week video, Singapore is more like 1 week slower than Hong Kong. Okay, so Hong Kong has already rallied for 1 week, from Chinese New Year opening till now. Probably we'll be expecting Singapore to do that before having probably a correction or something. Okay, this is SETS, a stock that I've mentioned like a couple of weeks already. Okay, so currently it's trading or testing its so-called resistance area. Okay, so I've talked about SETS somewhere here, and somewhere here after it break above this 20-day and 50-day moving average consolidated sideways. So the past 2 days have a nice rally, test the resistance, and there's a sell down. So expect some pullback over here. Okay, so if it pull back and then find a place where it holds like 420 region, probably can look to enter. And or as it tests this 20-day and 50-day moving average. Okay, so we would like to see how this one turns out. And it seems that SIA and SETS are moving in tandem, very similar pattern. Okay, so probably they are expecting more flags to be happening. Okay, so do watch out for some pullback, and then you can look for opportunity to enter on the long. So besides all this, there isn't much stocks that are very strong. Okay, so mainly some of the REITs that are trading at support. Okay, so this is CICT, Capital Land Integrated Commercial Trust. Also currently is testing support. There's a few attempts to rebound, but kind of like fail. Okay, so we like to see a real positive up, and manage to stay close up, then we can look for a trade to enter. So Mapletree Commercial similarly is mainly stuck in this region. Okay, so we would like to see this if we can trade above the region, support region, to look for entry. Alright, Keppel DC rate similarly, there's like probably three weeks of sell down already. Okay, and it's now testing this support region, previous low that it has done back in November. Okay, so we will similarly like to look for a candlestick pattern, for it to trade back upwards. A lot of the tech manufacturing stocks are having some sell down. Is in relation with the US tech stock also. Okay, so this is AEM. There's a lot of selling happening. So we will have to take a while for them to finish its consolidation and come back up. Okay, so we just have to wait and see how it turns out. Now for the Hong Kong market, okay, now we have a sell down in the Hong Kong market. It will be good to take note for those who would like to, I mean, have some diversification into Hong Kong tech stock or even China ETF. You can, it's probably a good time to monitor. Okay, so this is CSOP Hang Seng Tech. Okay, so there is quite a few days of big down move. Okay, it's roughly about like 16% pullback. Okay, so we like to see if we can form nice pattern or this support region hold, or this 50 days moving average holds well. So if it holds well, we can probably look for opportunity to buy or invest, put a little bit into a portfolio, like 5% or 10%. Personally, I'm looking to put 20%, as part of the so-called growth lah in my portfolio. Okay, so this is CSOP Hang Seng Tech. Okay, basically for margin account, this is a grade A stock, but the expense ratio is quite high, coming to like 1%. I can't remember the amount, but it's quite high. This is by iShare BlackRock. Okay, and it's margin grade B, but its expense ratio is like half of CSOP. Okay, so this is iShare by BlackRock. Okay, so basically they track the same Hang Seng Tech Index. Okay, so it roughly has the same drop. So for those who do not have SIP qualification, but you still want to invest in Hang Seng Tech, you can trade this Lion OCBC Securities, which is listed in Singapore. Okay, so this one you can also use your SRS to invest also. All right, so this also tracks the same thing, the Hang Seng Tech Index. Whereas for China, for the China index, so it's called A50. I think Singapore has one index ETF that tracks that one, which I don't quite like. The volume has been very small. Okay, so this is by Vanguard. Who has some low expense ratio. Okay, so you can look for opportunity, for this so-called sell down to be over, and then you can put some money or into invest some, as part of your portfolio. So currently it's like down like almost 9%. So it's like more than 10%. It goes down 12, 15. It's probably like time to invest. Okay, so probably you want to look at levels like this part 15%, about 12.50. Okay, so we see how it turns out. Okay, this is Alibaba. All right, it has mainly been trading like in a rectangular pattern over here. This is a rectangular pattern. Okay, so currently is trading at its support region. So we like to see how it turns out tomorrow. I mean, if tomorrow there's further selling, it breaks down, then forget about this pattern, and we have to reassess again. I have some requests to take a look at some of this stock. This is Xiaomi. Okay, so with the current pattern that is forming, doesn't looks good. Okay, this is forming like a cup pattern, and then this is a handle pattern, which means there is a likelihood of this breaking on the downside. All right, and so probably we'll like to see if this one can retest or break down, or if it does break down, retest this 200-day moving average, roughly about like what, 22 to $23. This is GDS. Okay, it's a very big data center, property management center, managing data centers, or they have properties in mainly in data centers in China. So it's like our Singapore Capital DC REIT. Okay, at this moment, this is mainly its previous like all-time high. Its IPO, it tests all-time high, does a consolidation and break new high. So this is mainly the major support region. Okay, this was a resistance turn support. Okay, so the support here has rebounded, support here again has rebounded back up. So we like to see if this support can still hold again, roughly about 98 to $100. So if this rebound back up, we can probably um, look to invest in this. Okay, so this is also a data center. So mainly why data center is more, we are looking more of like future proof investment. Okay, as we all know now, right now, a lot of things are moving into blockchain. Okay, blockchain, AI, machine learning, deep learning, and the requirements for data center and so-called um, power hungry servers, computing powers, it requires all these data centers to be there, for all these things to work out. All right, so I mean, in terms of future proof, I believe we need to have some of these portfolios in like Capital DC REIT or GDS. Okay, so that's why I'm showing this. I was like looking through the Hong Kong market. I mean, I just saw it by in terms of market cap, and I'm very surprised to find a new entrant right at the top. I mean, the top here is we have like Tencent, about what 600 billion, 600 over 6,000 over billion Hong Kong dollars, and then we have come down to 1,000 plus, and then we have this Kuaishou, okay, 1.2. I mean, it's like in the top. Oh, what 1 2 3 4 5 6 7 8 it's the 8th biggest company listed in Hong Kong. Okay, and it just recently IPO. So I don't know what this Kuaishou is. Okay, I just Google. Okay, so mainly Kuaishou is something like TikTok. They do a lot of short videos and stuff. So but I'm not too sure how they get their revenue or advertisement or anything. So I mean, I'm just very surprised. Okay, about this. Okay, so I mean, if you think TikTok is a big thing, maybe this might follow. So I mean, it's kind of like copycat to me. All right, so now the good thing is it has IPO. It has went above IPO price, making a new high here. Okay, so it has made a new high price here, roughly about 415, and then it pulled back. All right, so if it has done I mean, if you have seen GDS just now, this is like IPO stock. It rally up, make a new high, and then pull back. And if you start to do this, okay, do watch out already. And you probably will start to rally up back up. If we look at Alibaba, last time it also had a similar thing. Okay, so Alibaba was a very big consolidation. It rally up, make a new high, and then pull back all the way down. And then once it finishes its consolidation, right, it continue to trend and make new high. So why I'm showing this Kuaishou is also the same thing. Okay, so if it's a IT services kind of company, and it recently IPO'd, okay, and it has made a new high here, which is a good sign, positive sign. So one thing is we want to monitor if this one can consolidate and stay above IPO price, or somehow form a price support area. Okay, so if it does that, right, we want to monitor that more closely. Okay, so this is just an introduction what Kuaishou is about.